Traders, welcome back to today's market. So yesterday was a pretty big day, especially for the dollar. The Fed came off a little more dovish, well, quite a bit more dovish than anticipated. They did sounded like they took one rate hike that was possibly going to happen this year off the table, which surprised markets, and that's why we had that massive sell-off that caught a lot of people off guard. We can see, they had even more dovish tilt. Jump back into the currencies. What were we looking at? So we got that yen. This is what we were looking at. I put this in the fundamental breakdown letter for the week, that we were getting these consolidations at the low, and this is really your ideal setup that we want to see, because you can play it across multiple pairs, but you want to play it across weaker pairs. So we're anticipating this yen to strengthen, and that's exactly what happened. This was an awesome move. This is the ideal situation. This is definitely what we want to see and align ourselves with. And a lot of this was due to the dovishness from the Fed. It was due to Trump talking about how the tariffs are possibly still going to linger around. So that's what drove this yen higher, from some people repatriating capital back into the yen, and that's the same with the Swiss franc, which we were anticipating this 23.6 to get hit, which I think I said yesterday, which has happened. I am starting to wonder maybe if we get a little retracement. Let's see, maybe back down into mid consolidation, and then maybe push back to this 50, or we could push back to push back to that 38.2, or push back to this 50%. I do see the 38.2 happening. The 50 I do as well, but like I said, we are going to need another catalyst, which could be continued, this rhetoric Trump has going on now with, saying these tariffs are going to linger, and this could definitely drive us. Jump back to the pound. I guess there's not much on the pound, but let's jump to this. So we have this Theresa May. She was talking about resigning, but she will be attending this EU Leaders Summit. So there still is, a lot of stuff that we need to pay attention to with Brexit. Some think that her plans to, resign are just like a little tactic that she's using. So we will definitely see, but that could affect the pound as well. Euro. We did see this euro push up a lot higher into these highs, which I was a little unsure what would happen. I said, we were going to maybe consolidate at these highs, or I might have said push lower, but we did end up pushing higher, especially on this euro and the euro currency pair, which was, this was due to the Fed dovishness, which we did push up to some nice structure. Let's see. Consolidation up here, we are at $1.1430. I do see it possible that we're going to see a little retracement in the dollar, possibly back down to this 1360, 1370. And then once we get there, we will assess and go from there. Let's jump back to this yen. So we were in this. We called this out, and it did play out for, if we did get it from top to bottom, for almost 260 pips. So this was a extremely nice move. And this is where we were able to catch the that's yen strength. And we had that. We saw the pound. We saw the no Brexit vote come in. We saw the consolidation. There wasn't much coming out for the pound. It seemed kind of stagnant. But then there was some talk about Theresa May resigning. There was talk about an extended Brexit deal. So we definitely thought we were going to get some, maybe some counterparty risk, or just some pound weakening and yen weakening, and that's exactly what happened. So we had a target at this 14, around 146.50. We end up pushing quite a bit lower, almost 130 pips lower, which is awesome. So that was an awesome trade. What else did we put out? I did put out this NZD JPY. It did push a little higher from that GDP release. So the GDP came out, let's see, where is it? So the growth rate for year over year came out at 2.3 versus the 2.5 consensus, down from the previous. But then yeah, I think must have been some algos or something, but they did see that, it came out the quarter on quarter came out at 0.6 versus 0.6. So it matched estimates, but it was still up above, the previous. So we ended up pushing a little higher. See, we are still at this structure level, but we're definitely going to watch this. I do think it is still possible we could possibly push lower, but I'm going to be watching, the yen index again. I'm going to be watching, the yen or the New Zealand index, and also, what's going on with this China stuff. So if stuff would pick up with that, I definitely do see us coming back down to, 75.80, 75.90. But this is all going to be based on, if this China stuff continues to escalate once again. So if that does occur, I would be looking for, something like this. You get your, if we get back down to, this 38.2, I would already start mitigating losses. You're not going to want it to come back against you, take that full, 1% or 2% loss. So I would probably have it possibly like right here. So, you're going to cut that loss by about 10 to 12 pips, which can do massive. It can help you massive, especially in the long run with your portfolio. Let's look at that yen. So we're kind of consolidate at these highs, and we did get that boost from, that Fed dovishness. I do see us possibly retracing some back into this 111, but we could just form a nice consolidation at these lows, consolidate, build a flag, and then push back down to this 110 area where this other previous consolidation is. So that's it for the pairs that I'm looking at. I will keep everyone posted on what's going on and if there's any setups, but I am most likely done for the week. We did have some really good trades with that Euro CHF and that pound yen. So that's it. You guys have any questions, let me know. Hit me up. We'll talk soon.